Thanks, appreciate it. Yeah, the audio is definitely taking a serious leg up. I appreciate it. It wasn't cheap and it wasn't easy, that is for sure. What's going on, guys? I'm going to give everyone like 3 or 4 minutes to get in here, and then we'll get started. How's everyone's day? Hopefully halfway decent. A lot of people have been struggling out there lately, guys. It's not been a smooth ride for a lot of people, so. Start a podcast? Ooh, maybe. I'm going to have to get about 3 more of these mics. Maybe me, Chicken Trades, and LD will start a podcast. Next up, pod. The audio should be pretty good for everybody. I don't know if you're having issues with it, just let me know. The Chicken Man is my best friend from college. Met on the first day of college. We ended up in the same fraternity. It's kind of like best friends from day one. It's kind of crazy. Didn't know each other in high school or anything like that. And then, Yeah, so now that we have the mic and the camera, we are going to be doing a really nicely edited. We will set up video that is, we'll have my options set up in it, and it will have be just really, really crisp, guys. I'm stoked for it. We filmed it already, so now we're editing it, and it'll be done very soon. So, yeah, absolutely. This is a pretty good example of how, so this is my live setup. This is a pretty good example of how I have things set up. I'll drag it over a little bit, but as you guys can see, I have the dub charts on the side. And so I basically use those as my secondary watches. And then I trade off whatever I'm my main focus is for open or anything like that is on my main screen. Yeah, the focus setup tweets definitely been well received. Obviously, I always put out the watch list, but the focus setups are basically all right, this is what I'm doing. And they've been really nice this week so far. Affirm, Nike, SoFi. Well, I guess Affirm was last Friday, but of course. All right, guys, I'm going to go ahead and get started. I want to go ahead and start, instead of just doing all of the trades that I did today, I think it gets a little bit redundant. What I want to go over is my overall thoughts on the market right now, since we are seeing a bearish trend forming. And then I want to go over basically some of the trades that I feel have the most to learn from today and why I took them. And so I'm going to go over Affirm and UPST and kind of go over why I took the trades and where my conviction came from. UPST has so much strength because it's just, there's a bidder in there 24/7. It's insane. Why do I think it has good earnings or so much strength? It's a low float, and basically when earnings are good like that, you get just a lot of natural relative strength because it's harder to short. Braves are up 5-4 if anybody's a baseball fan. NLDS going on right now. All right, guys, I'm going to go over my general market thoughts first. I want to talk about this because I think it's very important to understand kind of where we're headed, where we're going, etc. Right? So SPY, this is a main focus for me right now. guys, if you were around last October, you can remember we saw a lot of volatility. It felt like every pop kind of got shorted down. We just kind of were in this really choppy time frame of the year, and that's what this is, guys. The news will say it's inflation and China and all this stuff. Every year it's different, and it's just seasonal weakness, right? There's always a catalyst. Remember, we don't control the markets. We just play them, right? Because they give us an opportunity every single day. And our job is to read what's in front of us, not predict the future, outside of, the next few minutes. It's our job to read the technicals and then, make an educated decision based on that, right? So the first thing I kind of want to go over is, why are we seeing this downside? Well, SPY has rejected the 442 level, right? And to understand, why that's a big deal, we have to go out to the daily. And the 442 level is basically the line in the sand of this downtrend that we've been in. Because when we gapped up after this initial correction, right, we rejected the 442 area. So that's now been a major resistance. No matter what, we haven't been able to get back over 441 or 442, excuse me. So now we've kind of been just making lower highs, right? That's what this is when you see this kind of pattern on the daily. And I kept referencing it earlier in the week, but we had this really nice support, on the shorter time frame in the 436 area. And when we broke that yesterday, right, into close, that made me a little bit worried. I figured we would bounce today, which we did, right? We gapped down to 432 overnight in futures trading, bounced, but couldn't regain that previous support, which was the 436 area, right? We tried in pre-market, off open, again, middle of the day, and then when we couldn't get over that level, right, SPY puts, and we saw the downturn, right, end of the day. And the reason that I took SPY puts overnight, right, is because of the fact that we broke through, we haven't been able to reclaim that level. So going into tomorrow, that's kind of a bearish trend, right? It's just old support turns into new resistance over and over and over again. And what we're seeing, right, is we had this big gap up in this area. And in my opinion, once we broke below 436, the next logical level for me, for SPY on the daily at least, for, based on the levels that I've drawn out, is the 428 area, right? Which is the level that we tested this past time, that we kind of got that initial correction. And I think that we need to reconfirm that support now that we've, rejected this level here at the 442 level. I think we need to retest that 427, 426 area. The 427 level is going to be my initial target because we've bounced there twice really hard. If we break through 427, that's when you start to see some bigger downside, right? And I think that's very, very possible. I could very well see SPY going to that 415 area, which I mentioned before. Just because, I don't think we see SPY 400, but, if you're talking about a longer term trend, we could, obviously see easily the 424 area. That's going to be my target tomorrow, is if we break down below 427, which I'm expecting us to gap down overnight, just because if you look at the hourly, right, we had this triple bottom kind of set up at that 436 area. Once that broke down, we're just kind of in this free fall point, right, where we don't really have a lot of support in this area, until we get down to the 428 area. So for me, these levels were never major levels. In my opinion, I think we're going to move through this area like butter. I think we end up seeing 429 easily. We could see a possible bounce, like I said, at that 430 area, which is the psychological level, because we did gap up once we broke over that on the hourly. However, I really do think we're primed to see this 428 area, hence why I took the 428 puts overnight. So do I ever clear my chart for a fresh view? I change my levels constantly. So personally, not really. I find it really helpful to have my levels on there, past levels that I've charted, because it's really helpful when I go back and I'm like, oh yeah, I remember this was a really key level, even if it was 3 or 4 months ago. Look at something like a firm, guys. That's a really good question. Do I ever clear my levels? Here's a good example. On a firm, right, we're fighting a resistance that you wouldn't know about until you looked at the weekly, right? And the only reason that I know that this weekly resistance is up here is because I went back and I studied this chart and I charted out the levels from scratch for you guys on live one day. And look at what we have. We're fighting a resistance that's, from what, 3 weeks after we IPO'd, 4 weeks after we IPO'd. And we're dealing with that resistance right now, right? And we haven't come close to it since. So, I think that's why it's really important to understand the chart and kind of have your levels on there for confirmation. I can always readjust levels. I'd rather not clear my chart and just kind of like have to go through that whole process again, right? It's like an instant reminder. When I pull up the chart, my levels are there. I can move them if I want, but obviously it's not necessary. But that was a really good question. Thank you. I saw that in the live chat. As far as SPY goes, like I said, guys, my short-term view is that we will see the 428 level. This is a good view on the hourly here. In my opinion, like I said, we need to test that 428 level. 428.5 will be the first area that I look to for support. If not, then like I said, we've bounced very, very hard at 427 twice. As you can see, if you look back a little bit on the hourly, we had some really strong support at 427. That's really the next major area of support. Everything else is like minor support lines. So that's going to be the key level for me. I would not be surprised to see 427 either tomorrow or the next day, but I'm betting that we gap down pretty hard. Tomorrow seems like the logical day. I didn't think they were going to pull it that quickly, but even with bank earnings tomorrow, guys, we have CPI data at 8:30 a.m., and then we also have the FOMC minutes tomorrow at 2 p.m., so therefore, I think that we kind of flush into that. These events maybe in a stronger market aren't as big of a deal, but in a weaker market, those events can be a really like negative catalyst, and it's just an excuse for SPY to get flushed, right? So do I use the body of the candle or the end of the wick? On SPY, I usually use the body because the wicks on SPY are like crazy sometimes. I will chart out the wicks also just in case. It depends on the name, right? Like UPST, the wicks are your friend. Like on a name like Coin, the body of the candle is usually the thing that I try to stick to. That's something that's dependent on every single name. Some names wick really hard, some don't. SPY wicks a lot. I tend to try to stick to the body of the candle, but yeah. So that's kind of my general thoughts on SPY heading into this week, the rest of this week. Downside will be fine. I'm, fully prepared to trade the short side, which I think we are kind of entering into. The red alarm level for me, right, is below 420, like the 426 area, right? We'll chart it out as like the lows on the hourly. If we break below 426, I think we could easily see 415, like I mentioned. That's just my thoughts. We'll probably see a bounce, but I think we're due for one of those days where we pull, a good 7-8 points. Maybe not 8 points, but like 6 or 7 points could definitely happen. So we haven't kind of had one of those like really bloody, like 2.5% days in a while. And we had multiple of them last October. So part of that was because of the election. Right now it's because of China or whatever else. It's just, like I said, seasonal weakness, guys. It's a thing. Best trade of the day, actually, in my opinion, better than a firm, was UPST. Give me 1 second. Sorry, guys, just had to shut the door. I originally tweeted, guys, that the Affirm trade was my best trade of the day. In reality, I think it was probably UPST. Because, after a trade, oftentimes you'll feel proud of yourself, right? You'll say, oh, I did a really good job of that, right? On the UPST trade, what I was excited about and what I felt really good about kind of going into it, right, was, trust me, guys, I sold my calls off open that I took overnight last night. They went like 300% or something like that. They went from, I had ads at 1, my average was like 111. They went to like $4 today. Absolutely insane, right? They went like 300 something percent. What I was happy that I did here, right, is I waited for the breakout to happen. And if we look at the hourly, right, or excuse me, the daily, we know that above 328 was the breakout level. So what did I do? Obviously, I was patient, as much as it hurt to be patient and watch it just continue to gap up. I waited for the breakout above that initial, excuse me, I'm going to go on the 5-minute. Wheel wants to be difficult. There we go. So as hard as it was for me to watch this breakout happen, right, I knew that above that 328 level was going to be a huge breakout. But guys, once we broke the 323 level, which I knew was the like first level that we needed to break in order to get up, towards at the highs, I bought the retest of the breakout, right? So it gaps up off open, right? Takes out 319, goes above 323. I waited for it to hit that resistance, which we saw it hit resistance here at 328. I waited for the pullback to the initial breakout level. And you see how UPST wicks? That's what I'm talking about. That's why I usually use the wicks here. And so I waited for the breakout over the level that I had drawn. And look at that. It hit within like 20 cents of the level I had, and I bought calls, the original 345 calls that I bought on that candle right there, and we saw that big wick down. That dip got bought like crazy because people knew that it was bullish, right? And we saw this major move to the upside, broke out above 328, came back down, retested, and then we see, what we ended up getting, like a 14-point move or a 12-point move on UPST today. So I want to illustrate that how important this method is, and I talked about this on the midday live, but when you see a stock breaking out, psychologically you are so tempted to chase, and especially if you're on a small account, guys, this is like the biggest no-no ever, because you will automatically chase, you'll go red on the position, either stop out or you'll psych yourself out that you made the wrong decision, right? So buying the retest of the breakouts off open are a little bit different. We're talking about an intraday breakout here. So buy the retest, right? Especially in this market on a stock like UPST, which is so volatile in terms of the options. You want to wait for a retest of that breakout at 323, just like I did today. And that's why I posted the chart and said, hey, high confidence, I'm buying UPST calls. And look what happens, right? We didn't have to deal with any redness, right? We didn't have to worry about the position going red. This was green from the start. We bounced off that level. Trade was green the entire day. Scaled out some here at 328 before we broke resistance, right? I took off like a third, and then I scaled out the remaining 60% throughout the day, all the way up to that 337 break, right? And so that was, the trade that, when I looked back at the end of the day and I went over my notes, I felt the best about. And I think that, if you took the trade with me and you understand why you took it, you should feel really good about it as well, because it's a really nice accomplishment to be able to buy at the key level of the, breakout retest and then be able to ride it all the way through. So I think this was, probably my best trade of the day, but you are going to see this scenario rear its ugly head every single day. And it's not an ugly, I say rear its ugly head in a, demeaning sense, but it's not, this is a good thing. It means the stock is turning. We talk about it all the time, right? Old resistance is turning into new support, and that's what we want to see. So that was very bullish that UPST wicked down to that support level and then gapped up, guys, right? We are looking at the 5-minute time frame right now. So if you want to follow along. Yeah, Braves just won. Congrats, Atlanta fans. I just watched that. Yeah, and thoughts on the 200-day moving average has been a decent buy or sell signal for me lately. Yeah, no, the 200-day moving average is nice. I used it today on Facebook. It's not like I don't use it on an everyday basis, but if I know something like Facebook is has flushed really badly, like it did this morning, I'll pull up the moving averages and see if those happen to line up with my support and resistance lines. It happened to line up with my support line, so I used the 200-day moving average for Facebook today, long side, and it ended up being a nice trade. I got stopped out early, but it's cool. That's an A++ setup. Absolutely. UPST, this is the definition of an A+ setup, guys. Wait for the retest, get long on calls. I don't think this position was read for more than like a minute, like as I bought it. Pulling up Webull on these lives and charting and adding levels has helped so much lately. Yes, absolutely. 1000%, guys. That's what this is all about. I'm telling you, if you are a new trader, this is the first thing you should learn. Do not worry about EMA clouds and all this stuff. You don't even know what it means. The first thing you should do if you are a new trader, right, and you are new to all of this, is you should learn support and resistance on like a basic scale, which I'm going to have some really nice content in the Discord for that. If you're like super new, if you are getting into trading options and you want to start with a good foundation, I highly recommend you learn key levels, right? Because key levels are literally everything. You don't need an algo to tell you when to buy and sell. You don't even need me to tell you when to buy and sell. You don't have to follow me on every trade. You'll start learning to take your own setups. You'll see these patterns. These patterns happen on a multitude of stocks, guys. Hundreds of stocks a day, every stock, right? Like this is what trading stocks is about. It's psychology, right? That's all this is, guys. The chart is a psychological map of the human brain. People like to, on this time frame, people like to buy UPST at 323, and they were selling it at 328, and then guess what? They decided, UPST has a higher value. That's all that is. People decided UPST is worth more than 328, or an algo decided that, right? It's and therefore we went to 335, because guess what? On the chart, once that psychological level of resistance was broken, what did the chart tell us, right? That the next stop, I still think UPST sees 350 this week. Once it broke over 328, there's, maybe a little bit of resistance here at 337. Like you can see this wick on the candle on the daily, right? This is the daily chart. You see that wick, right? That's from 9/24. You can hover over the candle and Webull will tell you the date at the bottom. Here, I'm going to move the chart up a little bit. You see that wick on this candle right here on the 24th? We had some resistance at 337. We tested that today. I think once we clear 337, it's a straight shot to 346. Maybe some small resistance at 342, 343. But in my opinion, 346 is soon. And then we see the daily breakout, right? And new at the highs, which I think will be great for SoFi. SoFi has been running in tandem with UPST. So, but that's, I say this all the time, but charting out a stock is like learning a human's personality. If you're going to date a person, you want to understand their personality, like how, you want to know them before you date them, right? And so before I trade any stock on a regular basis, I go to the weekly chart, I pull out to the daily chart, and I learn where the stock has been, how did it act at those levels, right? And that helps me have a really nice understanding. So a lot of people were asking me, a common question I was getting today is, okay, well, when you're making a watch list in the morning, what time frame do you look at? I look at the hourly. To make the watch list in the morning, I like, unless it's like news based, and even then I look at the hourly for sure, but maybe I'll put a screenshot up of the 5 minute. 80% of the time, I'm using the hourly chart to make the watch list. The Discord will be live on Sunday. I'm glad you guys enjoyed the levels. Have a tactic to avoid paper hands. Yeah. So if you don't know already, I have a system for scaling out. I scale in thirds or in fourths like a pie, right? So normally what I'll do is, once I'm up 20 to 30% on a trade, I take off 1/3 immediately. What that does is it protects my downside, right? So once I've secured 20, 30% gains, the downside of my position is automatically protected, which is going to allow me to be more stress free in the trade, right? So I'm not as worried. Like, leaving your whole position is never the move, in my opinion. That's not anything I'm going to ever do. I know my downside is protected. Once, I reach a level that I feel comfortable with, I scale out half, and at that point, the trade is usually already a win for me, and therefore I know that I'm kind of playing with house money the rest of the way, and that's how I'm able to scale out like I did on a firm today, where the bulk of my position I scaled out 60 to 70%, at 40, 50, 60% gains, and then I was able to sell 30% of my position over 100% gains, some for over 150%, and that really adds up in the long term, guys. It's just slow, consistent growth, and making sure that your risk management is priority number one. Yeah, and if you're on a smaller account, I get it's tough. If you have like a position size of like 4 contracts, yeah, like you're gonna have to scale in halves at that point, right? Or like one at a time, which is fine. And guys, like get in something that even if you're only taking 10 contracts, scale 3, 3, 2, and 2, right? Like scale in chunks. That's what I always say, guys. Scale in chunks. Have a tight stop on small accounts, and if you hit that stop, get out, right? Respect it and know why that's your stop loss. So. Key levels, support and resistance. Yeah, theoretically, same thing. It's just knowing like key breakout levels. At the end of the day, it's all support and resistance, right? But, key levels also can be, or it's more of a combination of, the chart, the specific chart that you're on and why it's a key level, right? Like understanding, okay, not only is this resistance on this time frame, but, this stock has had a lot of trouble here. So therefore, this stock really loves to hold this support, and, key levels is just a fancy term, I guess. Yeah, all my stops are based on key levels, unless like the premiums are just getting dogged because of like theta or something like that. That's a different scenario. But primarily, yeah, all key level based. So, and today a firm is a fantastic example of why key levels are great. So what did I do? I saw a firm get flushed hard off open. What did I do? I zoomed out on the hourly. What do you know, guys? This was the initial breakout on a firm above 131. I remembered that because we traded it like 8 times last week. And guess what? We have formed really nice support at 131. This is the hourly time frame, guys, if you're keeping track. So what did I do when I saw that pulled out? I said, you know what? 131.50 seems like a good level to buy calls. And I bought a large position in these calls today, guys, at 68 cents. I bought at 65 and 75. Or 77 and then 60 and 65, which happened within like a minute of each other. I think by the time I tweeted it, it was probably at like 60. So I know you guys got a better average than me. And look at that wick. Like that is strong support now for a firm. That is our new basing level, right? A firm is now basing in the 130s. And I think ultimately it's gearing up to take out at the highs. It may need to retest 137 and then, but today was the retest of 131, which I think is very, very bullish. And that's why I bought calls there, right? Because what did I do? I was looking at the 5-minute originally. I said, you know what? Let me zoom out, right? Because if I had, I'll take you step by step, right? So I see a firm get flushed really hard off open, right? And I'm looking at the 5-minute at this point. And then you know what? I'm like, okay, second candle, this is the 30-minute I'm looking at that point, right? We're getting flushed really, really hard off of the open. Jesus. I'm just all over the place today, guys. So we flush really hard off the open, right? And then I see that we're kind of bottoming in this area. Like the selling pressure is gone, which is a combination of looking at level 2 and understanding the price action, right? And I just saw, okay, sellers seem a little bit exhausted. You see how there's this really large red selling candle, right? When you see this really large red selling candle that's larger than the 3 previous ones, that's usually a sign of seller exhaustion, right? It means the sellers are exhausted, and look what happened, right? I zoomed out, right? So like my confirmation for taking the trade before I bought it was I zoomed out and I said, oh, would you look at that? A firm has really strong support on the hourly at this level, right? I think this is a pretty good place in terms of risk reward to buy calls. And I did, and look at that. The next 3, almost 4 hourly candles, super green. We tested that 144-ish resistance, couldn't get there. Market was overall pretty weak. and it ended up being 100 and whatever 88% trade. So 60 cents entry was fire. Considering pursuing my jurisdiction. No, so my parents are lawyers. My dad was a lawyer. He passed away, but my mom is currently a practicing attorney. I was planning on being an attorney. I was going to go to law school. I don't know, maybe one day if I'm, once I'm done with trading and, all that stuff, maybe one day, but not in the anytime near future. I got you guys and I love it doing what I do right now. It's a grind, guys, going live like 3 times a day, like today, or, even twice a day, right? It's nothing super easy. But it's a grind that I love, and, I've learned to really appreciate this process, and I fell in love with it when I went through it, and I'm, more than happy, and I'm stoked to be able to help other people get through it a little bit easier and, shorten the learning curve, because this learning curve was insane for me. When I first looked at a chart like this, I literally thought I was trying to read German, right? And I having, no prior experience. I was like, oh my God, this was so intimidating to me for so long. I was like, what does this chart even mean? Right? That was me for the first 7-8 months I was trading. And then I just dedicated a year and a half to screen time every single day, Monday through Friday. And that was really the turning point. And, now I know it pretty well. And, that's why I love doing what I do now. So. Yeah, and that is one thing, guys, is I wake up stoked every morning to get on here with you guys. At the end of the day, I could be going to a job I hate with a boss that I hate, and, I love trading. I love coming and having to use the discipline that I've developed over the last 2.5 years, and put it to work every day, because that's what this game is truly about, guys. This is about discipline, and this is about there's a point, right? You might be in here in this group and maybe you're just, in here for fun and you want to YOLO calls, and that's fine. I'm not going to ever tell you what to do or how to trade or what to buy and sell. But if you're in here because you are trying to make a living or trying to escape a 9-to-5 or provide more for your family or have a reliable side income, there's a day in everyone's life that does this where they have finally decided that they are going to treat this like a job, and something that they are serious about. And on that day, the discipline kicks you in the butt and you're like, okay, if I'm going to do this, then it's no more games. I have to treat this like a job. And when you are working, you don't use emotions. You use logic and the best resources you have available to you. And every day that we come to work, the best resource we have is the chart, right? Is the chart and our understanding of sentiment and how the market works and experience, right? So, and that's why I teach key levels. That's why I go through this with you guys, because if you're serious about it, there's going to be a turning point. And when that switch clicks, you're going to know, and you need to make that decision, right? You need to be like, hey, now I'm serious about this. Congrats, man. And if you suck, I saw someone say I suck, but I love it. Make sure you approach it with the right mentality, guys. I know it's easy to get down on yourself and feel like you can never do it, but confidence is a huge part of this game. So even if you don't feel super confident, you need to trick your brain into thinking that, hey, I've studied this. I've been watching Manz's lives. I've been charting in my free time. I've been getting my screen time in. I know this stuff now. And at some point, you just have to pull the trigger and apply that knowledge and that hard work that you've been putting in and let the results speak for themselves. So don't ever get too down on yourself. Keep the confidence level as high as possible, even when it's hard, guys. There was so many nights when I started trading and I turned down a 6-figure job and decided to start just trading full-time out of college. It was very, very intimidating. I had a lot of very emotional nights where I wanted to quit and never look at a chart again, but kept going. Yeah, so Jared asked, if a 5-minute candle finishes over confirmation and the next one finishes slightly below, are you out of a trade? Jared, that's a great question. The answer is no, not in this market. I've been telling people this, guys, use the hourly time frame a little bit more when you're trading. The 30-minute is a godsend. But even like this is a good example, right? With UPST today, we broke out over resistance, and then the next two 30-minute candles, almost three 30-minute candles, were teetering on that resistance line really heavily. This is a place where you need to go to the body of the candle and realize that the resistance truly wasn't at the wicks. It was this body, right? And that's where you see the body of the candle starting to really form a true support line there. And where a lot of people would have gotten stopped out, I adjusted my level a little bit and realized that this was kind of serving as a launch pad. And then look what happened. We got an 8-point move afterwards. So hopefully that answers your question, Jared. Sometimes it's just a tinkering, right? Like you have to really, okay, UPST's, acting more body candle-ish today. On days you tend to see larger moves, like UPST moved like, 7.5% today. I'll use the body of the candle just because there's usually better volume. Oh, what time frames do I use? In the mornings and pre-market, I use the hourly. During the day right now, I've been using the 30-minute, the hourly here and there if I'm in a bigger picture trade, and then on the 5-minute if I'm trading the open. I'll use the 1-minute candle for the first minute of open. And then I switch to the 5 pretty quickly. Yeah, options prices do move fast, but a good example is the Affirm chart today, right? Like if you were in Affirm today and you were only using the 5-minute candle, look what would have happened, right? If you were just use the 5-minute, right? Guys, you would have had a hellacious time trying to stay in for the full move, which is where a bunch of those profits came from, right? You would have looked at the 5-minute, right? Which we saw earlier. Right? These were super wicky candles on the 5-minute. Like, oh my gosh, that is not a trade you want to stay in. This means it doesn't know what direction it wants to go in. Hammer candle, right? But then you get the hammer candle, and then you get this full bodied candle. And after that, it was all gravy. Because if you're using the 5-minute strictly, you would probably have stopped out on some of these flushes, right? Or like maybe on this flush, right? There was a lot of opportunities where you could have easily stopped out if you would just use the 5-minute, especially here in this 135 area. But what it, ended up doing is if you would look at the 30-minute chart, right, and you kind of pull it out a little bit and you say, okay, well, what really happened today? This tells a lot different story, right? If we look at the 30-minute, that tells a lot different story, doesn't it? Right? We had one weak midday candle, but otherwise it was just up and away the whole day. That is the OG Interstellar poster. If you're not hip, get hip. Yeah, and everyone's different, guys. Remember that. You're not going to use all the same time frames I use. You will eventually develop your own style. I'm just trying to give you a good foundation to start with and say, hey, look, this is a pretty decent place to start. It's not super intimidating. And like I said, once the Discord is launched, you will see some of the educational videos I have in there for beginners. So if you're really trying to learn charting and you don't know much, those are going to be a great resource, I think, for you guys. So that's going to wrap up Technical Tuesday this week, guys. I'm pretty darn exhausted. I don't know about you guys. I've been working hard lately, going to the gym really consistently, so I'm kind of beat, but I've been trying to get in bed by 10:15 every night, and this is my third live of the day, so I'm going to sign off. I love you guys, and I know we're making great progress, and we are killing it for how trash the market is, but tomorrow we do the same thing again. Come tomorrow prepared with an A+ attitude, looking for A+ setups, and we are going to kill it again, guys. Might just trade the morning tomorrow. The afternoons have been so. Of course, guys, really appreciate you guys tuning in. Thank you. Very excited for what's coming up this week. I'll talk to you guys tomorrow morning on the pre-market live, 8:45. See you then.